My name is Valentine Hutchings, and I'm part of the team here at Tide. And for those of you who are new to Tide and what we do, I'm just going to give you a quick overview of our services before we start the masterclass. So we are the fastest growing online business current account provider in the UK, and we're used by over 350,000 businesses. So the reason why Tide exists is to save small businesses owners both time and money when it comes to their business banking, so that they can actually focus on growing the businesses and running the businesses, which is the reason why anyone starts a business. So really, we have an app packed with tools that are helping you do that, save time and money on your business admin. So that includes it's the categorization tool that categorizes all your transactions for you as they come in, or invoice features that allows you to create, customize, and send professional invoices directly from your Tide app, of course. We also have our invoice assistant add-on tool and many other features, just like our cash flow insight tool, which Philip will mention to you in a minute because it's particularly relevant here to help you master your cash flow. I will also talk to you a bit later on about how to make sure you stay up to date with what we're doing here at Tide and all our other events. But for now, let's start the event. And thank you to those who are saying, hi in the panel. Hello, I'm from Syria. Hi from London, Working Town, Manchester, Dorchester. Fantastic. Well, hello everyone, and it's fantastic to have all of you joining. And yeah, thank you for being here today. So for this third episode of our series dedicated to helping you master your cash flow, in our first episode, we talked about why cash flow should be a top priority for your business. In our second episode, we discussed the importance of knowing your customers to get paid on time. In this third episode, we are covering the when. And so Philip is going to be talking about why it's critical to agree the right payment terms, as well as how to negotiate them. So before we move on to that, Philip, could you please introduce yourself to our audience today?
Thanks, Val, and good morning to everybody. Whether you're from Manchester, Workington, or Syria, it's great to have you join us this morning. Yes, my name's Philip King. I was the Small Business Commissioner for a period of 18 months. I was appointed as the interim commissioner for 6 months, which extended to 18 as a result of COVID. But I finished that in June, and I'm now working with some organisations, including Tide, to live my passion for small businesses and cash flow. I've spent the last 42 years working in credit management, where cash flow has been the driver of my activity. I'm passionate about its importance. I'm passionate about small businesses and their role to the survival of the economy and the flourishing of the economy in the UK. We're working through these 5 questions that Val has talked about, and I think they're a good footprint for a blueprint for people to use in making sure that they spot the things they should be doing in managing cash flow. So I'm delighted to be here and delighted to be sharing some thoughts that I have, which you may not always disagree with, but if they make you think, then it's been worthwhile having a chat.
Absolutely, and it's all about having the conversation, which is what we covered in our past master classes as well, is have those conversations early on with your customers, the ones you're providing the service to. Before we move on and tackle really to how we can set up the right payment terms, we've both introduced ourselves. We'd love to know a bit more about you. Obviously, you're telling us where you're watching us from, which is fantastic. And I'm just launching a poll right now to ask you about your business age. So how long ago did you start your business? We'd love to know if you started this year, a year ago. Okay, thank you. Some of you are taking the poll. If all of you could reply, you should have it on your screen. That'd be fantastic to get to know you a bit better. Great. I'm seeing a lot of the majority of people watching us here today have started their business this year. Well, congratulations. This is really exciting. 55%, and then 18% have started a year ago. 18% again have been running the business from 2 to 5 years, actually 25%, and then 8% have been running the business for 5 to 10 years. All right, well, I'm going to end the poll now, but That's fantastic to know you a bit better. Once again, well done to everyone. And for those of you, especially who started this year, 50% started this year. So I think that's a key moment as well to be looking at cash flow and to make sure you know you're doing this right, Philip, right in the beginning of trading.
Yeah, absolutely right. And from the experience I had of working with small businesses over many years, I can say with certainty that businesses fail when they run out of cash. I've seen loads of businesses with low turnover, low profitability, struggling on, but when the cash runs out and you can't pay a key supplier, or you can't pay the wages, or you can't pay the rent, that's when businesses fail. So managing cash flow is absolutely critical.
Absolutely. And no matter the size of the business, right? No matter for how long you've been running. And I think it's thrilling to see we have, business owners tuning in that are in very different stages of their journey, because no matter how old or how new your business is, cash flow is always going to be the utmost important. So, and especially for small businesses, I think that's something we've really talked about, Philip. And so when preparing this masterclass and this episode in particular, you mentioned that agreeing payment terms with your customer makes for a healthier cash flow and ultimately a better relationship with that customer you provide the services or goods to. So we ran a few polls on our social media channels to see how our followers were feeling about their cash flow and if they were setting those payment terms. So, you know, on Twitter, 20% of the people who replied to the poll said they don't set the payment terms before they ship their products or deliver their services. On Instagram, that was 25%. On Twitter, 40% of the people who replied to the poll said they are not confident that their customer knows what the payment terms are. And on Instagram, that's 67%. So 67% of the people who replied to that to our question on Instagram said, no, I'm not confident my client knows what my payment terms are. So I think that's really striking numbers. And obviously, for everyone watching us live today, we'd love to know as well about when you agree payment terms. So I'm going to launch another poll. Please bear with us. I'm just going to launch it now. There we go. It should be on your screen. The question is, when are you agreeing payment terms? Either as soon as contact is made, when I have delivered the goods or services, or I don't have payment terms. Thank you. I can see a couple of you answering the questions. If more of you could answer, if you're seeing it on your screen, if you see the poll on your screen, it'd be fantastic to get some of you. Oh, okay, great. Thank you for replying to this. Okay, interesting numbers. 45% say as soon as contact is made. So that's very interesting. I assume you're in this masterclass as well to get maybe to know how to negotiate better payment terms. Okay, 54%. Okay, that's fantastic. 31% said payment terms are sent when I have delivered the goods or services. Okay, and 15% don't have payment terms. Well, fantastic, because for all those three categories, Philip has some great insight and advice. So that's fantastic. Thank you so much for all of you for replying to the poll. I'm just going to end it now. And I think that brings us to our very first question, Philip, which is really why is it important to agree those payment terms as early as possible?
Well, we talked about cash flow being important, and before I talk about the particular points I want to raise, let me just mention, if I may, the tied cash flow insights tool, because that can now link to business accounts that aren't tied, so you can bring other main bankers' accounts into the platform to use. But if you don't know what your cash flow forecast looks like, you can't really know what the right terms to have are. Very simply, if you're being asked to give 60-day payment terms to your customer, but you're being paid on 90-day terms, sorry, you're paying on 30-day terms to your supplier, you've got a month gap, which you've got to fill. So if you're paying for everything on 15 days or 30 days, in most businesses, you need to make sure that your terms are at least as good as or better than what you're having to pay on. So that's a really important point. And the cash flow insight tool can help you recognize that and build that into your thinking. Businesses tell me when I talk to them that one of their biggest concerns is the lack of certainty. They can live with longer payment terms, they can live with all sorts of things, but they want to be certain about what's going to happen and when. So if their customer is going to pay them on 60 days, but they always pay on the 60th day without question, they can rely on that coming in. If they say they're going to pay them on 30 days, the payment doesn't arrive till 60 or 90, they've got a real gap, and that's a real problem. And I've talked to too many small business owners who suffer huge sleepless nights because they're worrying about whether money is going to arrive in time. So it's really important to have that certainty. And therefore, it's important to agree payment terms with your customer from the outset. Never be afraid to talk about payment. One of the sort of archetypal British cultural things is that we don't like talking about money and asking for money. And that's a real drawback and an obstacle to getting these things right. But when a customer says to you, we want you to deliver this service or product, and we want it delivered, on the 15th of January, it must be there that day. The natural response to that is, yes, of course I can meet your need, but when are you going to pay me for it? I expect payment on 15 days or 30 days or whatever the terms are, and get that into the conversation up front. It's not a sign of harassment or being aggressive. It's a sign of professionalism. You're running a business just as they are running a business. They will be paying their suppliers and getting money from their customers. So they would expect you to do that. So don't be afraid to be professional. Have the conversation up front and make sure that they understand that your expectation around payment is just the same as their expectation around delivery or performance or quality of product or whatever else that is they're asking you to do. And it's important that conversation is talked about in equal terms. Otherwise, you run the risk that you look like you just want to meet their needs and payment is an afterthought. Well, it can't possibly be an afterthought. It's your bread and butter. It's putting cornflakes on the table on a Monday morning. So you've got to make sure that money comes in when you expect it. And that conversation needs to be right from the very front.
And I think that's absolutely key, because I think it's actually what you mentioned about, the payment terms and the conversation around when is the payment going to happen usually happens in the end, but having it at the beginning is it's a shift in the mindset, I think, really, to consider payments as important as the delivery of the good, because, well, you need to be having that conversation early on. Otherwise, you've kind of missed the opportunity to set the right relationship, right?
Absolutely, yeah.
And actually, talking about the relationship, and you've mentioned that sometimes it can come from a bit of a shyness around having those conversations, and I think it's great to be able to demystify those fears, really. But once you are ready to have that conversation, how do you go about negotiating payment terms that works for both parties? Because I think this is what we're trying to establish here, is that there is no reason why those conversations should be confrontation. They are only communicating around what's the best way for both parties to make sure that that collaboration is beneficial and a win-win on both parts. So how do you go about negotiating these terms?
Absolutely. Credit, exists to help sales. There is no logical reason why you would say to somebody, have these goods now and pay me in 30 or 60 days. That makes no sense. Sainsbury's don't do that. You walk in, buy the goods and you pay. So the only reason credit was ever invented, if you want to put it in those terms, was to enable sales to be increased and to encourage people to buy things, giving them the chance to use them in manufacturing or whatever before they had to pay for them. So because it is a way of increasing sales, it's a way of building sales, it's a way of doing business, and all business should be partnership. Businesses, in all my years of running businesses and working with businesses, I've always believed that suppliers are partners. I want them to work with me. I want them to be part of my business and to help me. And for that reason, I don't necessarily want to get the absolutely best price. I do want to get the best service from them. And by treating them well, I can make that happen. So the partnership approach is really important. And that's why I think the win-win argument is so strong. When you go into a relationship and you're a small business and you've just started in business, as many of our viewers have this morning, it's easy to think that you're the subservient one. The big customer wants your product, so you've got to roll over and do everything they ask and just live with what they say to you. But they want your product. They've said they want you to supply something. At that point, you have a point of power and you need to use it. And I don't mean power in terms of exploiting it, but power in terms of having the conversation. And if they say to you that our standard terms are 90 days, then push back. I understand your standard terms might be 90 days, but I'm having to pay my suppliers on 30 days. I'm a small business. I need your help. If you want me to be in business in 5 years' time, still being a valued supplier to your business, then let's work together from the beginning and get this right. So be prepared to push back, because I've talked to a small business commissioner, I talked to numerous large businesses, and without exception, they always said to me, if a customer told us they had a problem, we would try and help them. But the customer rarely did. So it's really important to have those conversations. And be aware that very often you're talking to a procurement team who are targeted on pushing payment terms out, on maximizing cash flow and all that stuff. If you can talk to the person that really wants your product, they can often influence things inside. And I don't care what a business says, if they can say we can only pay on 90 days terms, that's absolute nonsense. They can pay when they want to pay. They'll be doing payment cycles, at least every month, if not every week. They can move you forward if they want to. So the key is getting them on side so they want to do that. And if they push, and if they say they want 60-day payment terms and you don't really want to do that, they get something in return. Maybe it's supplying less deliveries, so you only have to make one delivery rather than loads. Maybe it's a bigger order. Maybe it's a longer term contract. I remember talking to a guy that did some PR work for me, and he said that he went into a conversation with somebody who insisted on 60-day terms, and he said, I would normally have just said yes, but he said, I've been listening to you preach this stuff for too long, and I thought I should try and put some of it into action. So I said to the guy, yeah, you can have 60 days, but I want a 6-month termination clause on the contract rather than the standard 30 days. And the client was really happy with that. It was absolutely fine. He said, I've now got an extra 5 months to find a replacement client if I lose this one. So I feel like I've won. But he feels like he's won because he's got 60-day payment terms. So get something in return. There's always something that you can give to the customer that will be of value to them, that will either offset the long terms they want or will enable you to encourage them to reduce them. And it's really important that you do that, because if you end up supplying on terms that leave you with a big cash flow gap that you can't fill, you will go out of business. Businesses fail when the cash runs out. So don't be in that position. And if you're going to lose money on the deal, you can stay in bed and lose money. So why rush around all day doing it? Make sure that you're going to make money on the deal. Make sure that you're going to get paid in terms that enable you to be paid. And don't be afraid to push back. And I know it's easy to say, but if you really are going to be forced to take terms that will be crippling, you're better off not taking the business. That's a hard decision to make, but sometimes you're better off not doing the deal.
Right. And I think it's crucial to have that mindset. Once again, I think it really is a shift in mindset from customer is king and I need to just say yes to everything, to actually I'm providing a good or a service that they are requesting. So I need to make sure it's within my terms as well, so that I'm able to continue trading. And as you said, right, it's the cash flow question is a crucial one, because it means continuing trading or not. So I think this is very insightful, and please do continue to ask some questions, because I'm seeing one already about the best way to negotiate payment terms. We're going to go into a bit more details about this, but we will get to your question. Thank you so much. Please do use the Q&A room to ask maybe more detailed question about your cash flow, your business. We'll take those in a minute. And also I'm seeing something from Marcel, a question about cash flow insight tool. I'm just going to send it right now on the chat, so you should be able to go to the dedicated page on the website. Now, Philip, we have mentioned, those conversations, how important they are, and how they need to happen very early on, so that it's a win-win on both parts. But what are your best tips to avoid misunderstanding and confusion? And also, what format are you having those conversations on? Do you recommend, having a either physical or, in this COVID word, a telephone, or maybe a video conference, chat, emails? Like, what are your best tips to avoid any confusion and to have those in the best possible conditions?
So in an ideal world, everything you sold would be subject to a contract with 15 pages, absolute clarity around who was responsible for what, when you'd be paid, and all of those things. I recognise that if you're a small business, that's more than you can accommodate. So at the very least, if you haven't got a formal contract, then make sure that you confirm details in writing.
Right.
So if you agree to sell to somebody, agree the price, agree the delivery date, and agree the terms of payment in writing. So you've got something to fall back on. We've talked before about the importance of knowing who you're dealing with and so on, because all of those things are equally important if you end up in the unfortunate position of having to take legal proceedings. But have something in writing you can fall back on. One of the challenges that businesses face, and I've faced this many times over the years, is what's called the battle of the forms. So you send an email on a contract that says our payment terms are 30 days before you start dealing. You then get an order, and on the order it says our payment terms are 90 days. And that's the last document to transfer, so that form prevails. So the terms now are 90 days. If that happens and you need to watch for it, you need to respond and say, we've got your purchase order. Before we can fulfill it, we need to confirm that our payment terms are 30 days. Just to make sure that your word is the last one in the chain, because it's easy just to fall foul of that and get caught out. And the other thing that's really important is the day the clock starts ticking. So some buyers are very cute and they put in something like, payment terms are 30 days from the date the goods are received, installed, working fully and signed off. If your terms are from date of invoice or from receipt of invoice, then you need to make sure that that's included. So it's 30 days from receipt of invoice, not 30 days from me selling the goods to somebody in some shop in Southampton in 6 months' time. Because there are all too many examples of that where businesses, particularly with things like freelance writers and stuff, where they write something to someone, but then it only gets paid for when it's actually published. And that can be months or even years after the event of it being written. So you need to make sure that you incorporate into the wording when the clock starts ticking. And it doesn't matter what it is, as long as you know and they know and you both agree. But it's a really important element, and it's a risk if you don't do it. But fundamentally, get terms agreed in writing, because that's absolutely, however you can do it, whether it's email, but don't rely on a conversation or a conversation in the pub or a telephone call. That's not a.
Yeah, and maybe we were talking about the fact that it's sometimes, for some small business owners, those conversations are quite nerve-wracking and can be stressful. So would you recommend for the ones that are maybe a bit within a not a comfortable space to have those conversations, would you recommend having those conversations on the phone or physically, and then of course confirming by email in writing what was agreed during the conversation?
I think whichever works best for the relationship you've got. Some relationships are very transactional. You get an email, we want to place an order, and it's all, email's fine. If you're having conversations with somebody about what they want, then clearly it's important to have that conversation and then confirm it in writing. But I think, the key is making sure that it's back to the first point we made this morning, really, or this afternoon, that talking about it up front is really important. The confirmation bit is just to make sure you don't fall foul of misunderstandings and don't get wires crossed and misunderstand each other.
Absolutely. And Philip, before we go on into a bit of, wrapping up and just sharing the takeaways from this session, could you remind everyone, we talked about the confirmation writing. What would you say are the elements that absolutely need to be in that confirmation, in this last written confirmation before delivering the goods or sending the goods?
I think for me, it would be what we're going to deliver,
right?
When we're going to deliver it, when we're going to be paid for it, when the clock starts ticking in terms of that payment as part of that payment terms piece, and anything else that's peculiar to your business. So in some cases, there'll be a proof for copywriters, it'll be proofreading and revisions. For somebody else, it might be making sure the goods are satisfactory or whatever. But I think if you get delivery date, what the products and services are, so there's no misinformation about that. The other thing, of course, which also can happen, and this will be in a future episode, is that you supply something in good faith, but then the customer says that's not what I wanted, so I'm not I'm not going to pay for it. So if that's in that same email, you've got one source document that you can both go back to that says, yes, it was yellow ones, it was 50, they were going to be delivered on Wednesday the 15th, and you are going to be paid. We're going to be paying for them 30 days after that, or whatever it might be. I think it's that sort of just get the stuff that's really key to your business, so that there's no misunderstanding beyond.
Absolutely. And I think it's quite key to have this all in a one place. Obviously, email is going to be I am supposing for everyone the easiest way to communicate in writings. But having that one place where you can just both go back to, I think just makes it so much clearer for everyone as well.
And it's worth getting a read receipt on the email as well.
The what? Sorry?
A read receipt on the email, so you've got confirmation that it was read, so that if they come back and say we never saw the email, you can say yes, you did on Wednesday at 3 o'clock.
Absolutely. And you can also, if they're not getting back to you and you want to have their confirmation, you can follow up and ask to confirm as well, which is once again to establish that relationship, I think, that we talked about, which is great. Now, before we move on to the Q&A, and please, I'm seeing a few questions. They are brilliant. Thank you so much. We'll get to those in a minute. So please do continue to ask your question in the Q&A box. But before we move on to the Q&A, Philippe, could you please tell us and our audience watching us live, or if you're watching us later on YouTube and on our blog as well, it's great to have you along. But can you remind everyone what are the main takeaways from this episode, and what ultimately they can start doing as soon as this masterclass is over?
Yeah, I think there are 3 takeaways, Val. The first one is include payment terms in the first conversations. Never be afraid to talk about it. The second one is if you fail to negotiate, you'll be paid in your customers' payment terms, whether you like them or not. So always negotiate payment terms and agree them. And the third one is agree terms in writing. Okay,
I think that's a great summary and a very insightful. Please tell us what you think about those takeaways, if you were doing some of those, if you are thinking about implementing some of those. I think it's fantastic. And to remind everyone, so first one is include payment terms in the first conversation. Always make sure to negotiate the payment terms and agree the terms early on. If I've taken the correct notes. Great, fantastic. Well, thank you so much. Let's jump in the questions, because we have some wonderful questions already. So from the first question, let's answer it live. So I wonder what's the best way to negotiate payment terms with a wholesaler who says in their terms and conditions that revenue will be paid within 90 days For a startup, these terms seem really unfavorable, but as a startup, your negotiation position isn't a strong one. I think that's a wonderful question, because you've mentioned those 90 days payment terms, Philip, at the beginning, and that sentence about as a startup, your negotiation position isn't a strong one. Hopefully, I think you've asked that question right at the beginning. Hopefully you've changed your mind about this, because I think, Philip has done a brilliant argument that actually that's not true. But Philip, I'll let you answer the question.
Yeah, I think there's a couple of things. One is that lots of businesses say their standard terms are 90 days, and that's worth pushing back on. I think the other one is what we talked about earlier, the full and frank conversation. Guys, I'm a small business. If you pay me on 90 days, I've got to pay my suppliers on 30 days. I'm not going to survive my first year. So do you want me to disappear before I've even started supplying you? The second thing I think you can do is, if they're really insistent that their payment terms are 90 days, then think about what you can do. Can you increase your price slightly so that you could then borrow money to fill the gap? And cover the cost of borrowing the money? Or can you also offer them a small discount and say, okay, fine, 90 days, but I'll give you 1% discount if you pay me in 30 days so that I get the money quicker. And 1% might not be a huge amount of money, but it might be interesting to them for their margin and so on. So look at ways of doing it. And I think the conversation has to be, what can we do together to resolve this problem, which is insurmountable for me, but I want to supply you. So what can we do to work together? Is it discount? Is it increased price? Is it something else? Sometimes I've been in situations where the guy that's buying doesn't really care what the price is, but the procurement team are fixated on the terms. So he's very happy to increase the price by quite a lot in order to compensate for the increased terms. And that could be to your advantage. If you can make an extra 10% and get money at 5% to fund it, then that might be good. So I think just think through the options that you might have, but have conversations. Absolutely key. The conversations often go better than you expect, and they're not going to be simply pushback. They'll actually have a conversation with you, and they want you to survive.
Yeah, and I think that's brilliant also, how you remind everyone how they have options. You mentioned giving discounts if they were to agree shorter payments periods, but also you mentioned before during the third point about, well, maybe putting in, agreeing those payment terms, but putting in a different breaking clause, that the breaking clause is not 30 days, but 6 months, so that, if there is an issue, you have more time to find new clients. So I think that's a fantastic takeaway. There are options. Explore your options and push back with some of those options, right?
Yeah.
Fantastic. Let's take a second question. So Yasir is asking us, when we quote to our customers, it is printed on our quotation form and also on payment invoice. Our is within 30 days after delivery, but for a manufacturer, it is 50% upfront and rest before delivery. So this is causing some problems.
Okay, if I read this right, I think what you're saying is that in the manufacturing part, people are reluctant to pay you 50% upfront of the rest before delivery. But I also recognise that if you're manufacturing, you can't afford to manufacture things that don't get sold and people don't pay for, and that's a real risk. So it's clearly in your business's interest to do that, and it's right. I'm delighted to hear you're putting it on your quotation form and on the payment invoice. That makes absolute sense. And 30 days after delivery is fine. That's obviously clear and it's working. I guess it's a business decision, isn't it, around the manufacturing piece. I often encourage small businesses to ask for payment upfront as a deposit or as a part payment. It makes sense. I was talking to a freelancer this morning, a copywriter, and said, get money up front before you start writing. If you're not confident you're going to be paid for it. It's the best way you can do a deal. But if it's a problem, then it's a commercial decision about whether you want to take the risk of being more relaxed about that. If I've misunderstood that question, come back to us. But I think it's where we are.
Great, thank you so much, Philip. And yes, yeah. If you have a follow-up question or you wanted to ask something different, please do send us. Thanks for the answer. I mostly deal with the NHS, so no chance for upfront payments. Thanks for the answer. Okay, great. Well, hopefully that was answering. And then we have another questions from Camilla. Camilla, sorry, I don't know if I pronounced this right. Hello, Philippe and Valentine. If customers pay late by a few days and it's happened repeatedly, I guess the question is what to do if the customers pay late by a few days and it's happened repeatedly.
Okay, so I don't want to preempt the next two episodes, which are how and where, which will cover this specifically. But I think this is again a question of communication, relationships, and I'll do a lot more detail next time and the time after. But I think this is where. And you're right, businesses do just fall over the month end and pay late, and for them it's not a problem. I remember a small business commissioner talking to a business at the end of last year, and they'd got a payment going out. I think it was the 7th of January, and I talked to a small business who was desperately trying to get the wages paid before Christmas, and I talked to the big business and said, "Yeah, we can pay it. We can pay it today." It was just on the next payment, right? It missed the last one, so we left it to the next one. It's just a few rows on a spreadsheet. No, it was no hassle for us. When they realized it was a real problem for the small business, they pulled some stops out and got payment made the very same day. And I think, this is where you need to have a conversation with your customer and just say, you know what, I'm struggling every month because you're not paying me till the 7th. What can I do to get you, could I invoice you earlier? Is there an optimum date that I could get you the invoice to get it into a payment run more easily? Could I give you any more information on the invoice to make it easier for you to process? What can I do to help you get my payment out quicker so I get it on the right day rather than a few days afterwards? I don't know what business you're in. I'm not sure what the circumstances are, but I would urge you to have conversations and be honest and open about what problems it's causing you. Many businesses aren't as bad as they're painted out to be. They just don't think.
Great. Yeah. Well, thank you so much. I think once again, I think it's that point and those tips you gave, Philip, about having those conversations very early and being honest and open about any issue that come up even after the beginning of the relationship. I'm seeing a comment as well from Roger. Thank you. Thank you, Camilla. I was saying that was so helpful, Philip. Thank you. I'll talk to them. Oh, that's wonderful. That's wonderful to hear. We have another comment from Roger. Thank you so much, Roger, for your feedback. If you've got any questions that are appropriate for your business, please, we still have a couple of minutes, so please do feel free to ask them in the comments or the Q&A box. Also, just before we wrap up, I'm just going to send in the chat, I've just sent it now, a few links so to our events page, to our Facebook, Instagram, and LinkedIn page, and also our YouTube channel, in case you want to sign up for next events and rewatch our previous episodes. So this is the episode 3, as we were saying, and as Philip mentioned, we have the episode 4 and 5 coming up, where we'll tackle and cover the how and where. So so please make sure to keep an eye out for these ones that we'll host in the new year. If you, I'm not seeing any more chats or comments or questions, so I'll just, oh yes, we've got one more. I applied for some startup loan and they asked me about cash flow plan. So is it free to use Tide Cash Flow for its customer, and how to make a good cash flow plan for the loan? Absolutely, Tide Cash Flow Insight, you can start using it. So have a look on our dedicated page, have a look about the future. We also have a whole FAQ page about Tide Cash Flow Insight, so that you can see how it can help you look at your cash flow, predict cash flow. So yeah, it's all available to you, and hopefully it'll help you to get that startup loan. Best of luck with that. That's very exciting. Great.
Can I just add Val, that if anyone wants to ask me any questions directly, personally, I'm on LinkedIn, Twitter, you'll find me easily enough. Feel free to just drop me a note and I'll happily come back to you on anything specific that you might want I can help with.
Well, that's fantastic. Thank you so much, Philippe. So yeah, if any of you have follow-up questions, please, Philip, if you can share your LinkedIn ID on the chat. I think we we have yes here asking if you have that, Andy. But
Yeah, let me
great.
see if I can work out how to do that. I will try, yes.
Fantastic. Yeah. And whilst you are doing this, Philip, I'm just going to remind everyone and just tell you a bit more about cash flow, because it allows you to view your account activity, but also predict your balance, check invoice payments probability, and track your credit score. So it's just going to give you a very healthy numbers of tool to look at your cash flow and make sure you can improve your finances. So I've pasted the link in the chat above. So yeah, feel free to have a look, and don't hesitate to reach out to the team via the eNAT chat to ask them any questions as well. They are here to help you, and they'd be more than happy to help you. Before we just close this, I'd like to thank you all again for being with us today live. It was fantastic to have you, Philip. Thank you so much for all those very helpful insights and tips on how to better manage those relationships with customers and how to negotiate payment terms to make sure, we businesses do get paid on time. So thank you so much for that.